Okay. Galileo, buy now, pay later for B2B. We had a debate a couple of weeks ago on the merits of buy now, pay later. Now it's in the B2B space. Who wants to take the first dig at this one?
If someone wants to explain it, I've got some more things that maybe not a lot of people have been thinking about, but if someone wants to set it up, that would be great.
I'll set it up here real quick. So right now, buy now, pay later, as of July, is growing at a annual, I think the CAGR is like 45%. So it's growing. No banks offer it. So basically what Galileo is doing is they're offering the B2B buy now, pay later solution, and it's customizable. So if you want to implement it into your bank, you don't have to buy SoFi's major big platform. We will give you that buy now, pay later API, so you can implement it into your bank. And then hopefully by 2025, Galileo gets a ton of new banking partners, and that will be a wedge for us to offer other stuff to them in the future. That's my take on it. It is a huge TAM right now, and like it's completely untapped. So it's coming, and the buy now pay later wave is going to be here before we know it. And no banks are equipped to like offer this solution, and SoFi should be able to offer that pretty soon. Well, actually, it looks like they're rolling it out now.
So just to give you guys a couple of little facts here, okay? Now, there's a big difference between an Afterpay or an Affirm and what Galileo is offering, okay? Now, if SoFi is going after buy now, pay later, then this comment here, buy now, pay never, makes sense, okay? Like that sort of idea is quite funny, but let's actually get into the Galileo side of it. Galileo is not this sort of, buy now, pay never, because we don't take on any of the risk. We're just offering businesses the opportunity to take that risk. Okay, so we get paid regardless. So
well, what's the distinction between that? What do you mean by we're offering businesses the opportunity, but we don't have that risk?
So we're offering the businesses to be able to take a loan from one of their customers, right? To take on a loan, not from their customers, but to give out a loan to their customers. They are going to be responsible for the benefits of those, the interest rates or whatever from the client, as well as the risks that might come if they default on that loan. A buy now, pay later product, even if it's $50, is a small loan. You're lending out the money and you're hoping they pay you back eventually. So there is definite risk, okay? But Galileo's product is just saying, hey, we'll give this to you and we'll let you take the risk, but we just want our little cut of the transaction fees. And that's what I think is quite interesting, because we take none of the risk, but yet we offer the solution. The same way that, a Salesforce doesn't care if you get your business off the ground. You're still paying them your monthly fees, but they're offering you that solution.
Yeah. In other words, put differently, if you think of buy now, pay later as both the B2B and B2C, you'd rather have the other business accountable to pay you than any individual consumer who can just default on that loan, right? And so buy now, pay later, introducing it through Galileo to other businesses first is definitely the safe route to go, as opposed to the SoFi branded buy now, pay later option that's B2C.
And like Riley said, this is even if these businesses do get into this product, it is going to be quite popular, and that's going to bode well for Galileo. So the buy now, pay later industry is forecasted to surpass 900 million global users by 2027. So in 5 years, 900 million users. That doesn't mean we're going to get 900 million users. We're not going to get nearly as many as Affirm or Afterpay, but we hopefully will be a percentage of that market.
I think we will, though. Afterpay, Affirm, all these companies have way much more, they have so much more risk than banks do if the banks offer the buy now, pay later option, because the banks can see your cash flow. And if the banks see your cash flow, they can determine whether or not your credit worthiness is as good. I think SoFi and all these banks offering buy now, pay later, which is going to be the future of buy now, pay later, is going to be way more profitable and way lower risk than what Affirm and Afterpay and all these other buy now, pay later merchants that don't have a banking charter are offering, because they don't have the data. They just have FICO score. And if you plug in through some Plaid, if you plug in some financial institutions. They could pull some data, but it's very, very, very small. So I think buy now, pay later will be a little less risky for institutions the way that Galileo is offering it if you have a bank.
Sure. And I mean, even this as a total addressable market right now in 2022, supposedly this is according to Grandview Research, and I can send the link through if you guys want. But the 2022 revenue, there we go. I just sent the link. For 2022 is $6.2 billion. By 2030, it'll be $39.41 billion in buy now, pay later revenue. So it is growing at a good pace. But that being said, that's not even what I want to talk about. What I want to talk about is actually understanding how Galileo benefits from this if someone uses buy now, pay later versus a regular transaction. This is quite cool because as I was diving into this, if someone were to make a $1,000 transaction on our platform versus a $5 transaction, there's actually a huge difference in right now, there's not a huge difference in how we benefit. We take a fixed cost. So even if there's a $5 transaction or 1,000, it's the same amount that Galileo benefits. So what buy now, pay later does, where we can really benefit, is this breaks us up into 12 or whatever. It could be, flexible on the actual payment amount. But let's say it's 12, monthly payments across an entire year. You're taking $1,000 transaction that could have been one singular amount of transaction cost for Galileo, and you're turning it into 12 separate transactions. That means we take our same similar fixed cost and we divide it or we times it by 12 different transactions because we take a fixed rate, right? So we're actually 12xing the amount of revenue that we're going to take in from a single transaction on buy now, pay later.
Is this based on is this just based on how many transactions or like also the price of the product that the people are going to be using?
So the price of the product does not matter at all. We take a fixed cost. So if you're buying a car with on credit card that you have that's through Galileo, they are taking their 40 some odd cents or whatever it is. I have estimated based on competitors that it's somewhere between 40 and 45 cents per transaction. But I mean, I don't have that in exact data. That's just going off what the competitors offer. So I'm sure it's going to be somewhere in that range. But if you're dividing it 12 separate times, you're really increasing your margin on a single transaction. That's very cool,
Can we answer this question? Theo says, why would a business take the risk with Sofi when Afterpay, Split It, etc., put the risk on third parties instead?
Well, Sofi, the way that buy now, pay later is going to be here in the next 2 years is that Afterpay has to go to merchants to make a deal with them. But in the future, Visa and MasterCard have already built the rails so that you can use buy now, pay later anywhere without the merchant's consent or even them knowing.
Yeah, that doesn't answer the question though.
Okay.
So Afterpay or Split It doesn't white label their buy now, pay later to other businesses, right? So
exactly. Not only that, but also you're limited to the merchants that are allowing you to do this. If you do it with a bank and you're willing to take the risk or whatever, I mean, who knows what the risk will actually be. But if you're willing to do that, that's with every single product that MasterCard is able to be transacted at. So the actual amount of products that you're able to use buy now, pay later on get much, much larger. Anything that's above $50 worth of value. And in fact, I just used buy now, pay later like 2 days ago because I was on Amazon and I went to buy this preamp for this new mic that I got. And they wanted like $800 for it. And then up in the top for Amazon was like, oh, do you want to do this at 0% APY and we'll track it for you and make sure that, I was like, okay, well, I'll just keep the money in my pocket and continue to make interest. Like, why would I give them all the money if you're going to offer it to me at 0%?
I would also imagine that if Sofi uses buy now, pay later as a B2C product through Galileo, then they would also have some additional benefits because first of all, they own Galileo. And second of all, I would imagine Sofi's bank charter would also give them some preferential rates in terms of the end rate offered to consumers, or even that stability that other just pure fintechs like Afterpay or Split It wouldn't have altogether. I mean, Tannor or Riley, you can keep me honest on that, but I would imagine both of those things have an effect on the end rate that's offered to consumers, which would be an incremental benefit for Sofi's white label solution as opposed to these other companies.
I'm not understanding quite like the question. I mean, I think Affirm and Afterpay and these sorts of things, I think they have a really, really compelling offer. You know, I do think it's really, really good. I don't know if necessarily we'll have a better product in terms of just, you know, a one-to-one product with them. What I do think is really exciting is that to be a part of buy now, pay later, especially on this banking side, is that you need a bank sponsor. Now, we can definitely really outprice Affirm and these sorts of companies if we say, hey, not only will you need a bank sponsor, we'll be that bank sponsor. We'll give you guys a discount on the products if you use buy now, pay later with us and allow that to be used through Robinhood or some of these things. But that's sort of how I could see it being beneficial.
So instead of it being just a pure like buy now, pay later Affirm, which is what their business model is built around, if it's connected via a bank, that means they don't have to make a deal with Home Depot to offer buy now, pay later. If you're
Exactly.
buying it through SoFi, it gives you the buy now, pay later. Yeah, it's very interesting.
Yeah,
Very interesting.
it's sort of a change in MasterCard's terms of service, where they're going, hey, if you're powered with MasterCard, we're going to allow buy now, pay later. Okay. And if you want to sub out of it, then you're going to have to, you know, send us a letter of intent saying, hey, you want out of this deal. Not like you don't have to opt into it. You're automatically opted into it. And we'll have to, you know, selectively change out of it, which I'm sure not a lot of merchants will.
One thing I think I like about SoFi and how they're going to be implementing this is SoFi in the app. Like whenever SoFi Pay in 4 comes out, it's not going to just be like, okay, you want to buy this one item online. Here, you can pay this one item over time. What SoFi is going to do is they're going to allow you to open up your phone, type in how much money you want. So I could type in $450, and then I'll click a button, and then I'll add it to my Apple Wallet, and then I can go and scan and spend that $450 wherever I want. Different purchases, I can rack up 10 different purchases, and then by the end of the month, it will stop the $450 and it'll lock it in, and then it will give me my plan. So there's so much like flexibility with this like buy now, pay later solution, where it's not just like one product. I can buy like 10 different things at Home Depot, where I can go and do like a whole shopping spree. All you have to do is just enter in your money, and it's just like an instant loan. So I don't know. How can you compete with that? Like that is so like consumer concentric. Like they're SoFi focusing on the consumer and like what they need. I think that's going to be really cool.
Last thing I'll say on that before we can wrap up buy now, pay later is that there's a wider point to be said, or to be highlighted, I guess, on the trust that's being built from SoFi's management to SoFi shareholders and users in terms of the promises that they're making with regards to some of these release dates. Because buy now, pay later was promised before the end of the year, options were promised before the end of the year, and now we're just seeing SoFi actually hold true to those dates. And you would think that that's a no-brainer, but it's not. It has to be said because so many of these companies, SoFi included, has been pushing back a lot of their timelines for a lot of these new releases, especially ones that are so monumental as these ones. So I just wanted to bring it up.
I mean, come on.
There you go.